Good morning, friends. Welcome back to the fifth episode of State of the Market Live. Today is 10th June 2022. It's a Friday. Let's see how the markets have behaved yesterday, and then we'll proceed what they are going to do today. We'll start with Nifty futures. Yesterday, as expected, the market began at my key level of 16,244, though it did not hit the low or broke that level, 16,244. You can go back to episode 4 of State of the Market to discuss the probabilities below 16,244, and then you can come back and watch this video later. You will understand the context why I said the market has a fair chance of going below 16 to 44. Yesterday, we were rejected. Buyers came right at the open and they started building momentum slowly. It was not fast like this on 8th June, and it was very slow. Slowly, they built towards the 20-day moving average, and then over the day, because it was expiry, it went towards 16,481. Our level was 16,479 and we exactly closed there. Initially, we went to 16,400. You see most of the call writers fought here. First, when the market went to 16,400, call writers fought heavily and took it back towards 16,329. You can see that the market is exactly following the levels that I give in our State of the Market live series. It was rejected at 16,244. Then it went to it broke 16,329. You can see that there is a kind of minor congestion here, and then market spent some time here, and then it went towards 16,400 levels, where I said 16,417 is the level to be broken. Towards the end of the day, we broke 16,417 and hit 16,479, which is a key level where we have closed. In Bank Nifty as well, we see that we opened right inside the range, below the range of day before yesterday. We spent a lot of time there and then immediately went towards 35,080 levels, which was the level mentioned in yesterday's State of the Market live series. Right at here, this is where at around 10:25 or at around 10:20, buyers came and took the index back. This was very clear in order flow that buyers were in, and the market was taken towards 35,007 levels. Now today, what is the situation? What are we expecting today? Today, you see that first we'll start with SGX. What is happening with SGX? You see that the market is right waiting at 16,244 levels. Of course, we cannot go with this level and start trading the market. We should wait for the pre-open to see how it receives and how it trades throughout the day. My experience says in any week, in any expiry week, if we are ending higher like this, the Friday will be a down day typically. I'm not saying all the time, but almost 90 to 94% of the time, we will end lower on a day like this. If Thursday is an up day, typically we may either trade in a range, or we may fall below the day's lows. So as SGX indicates, if we open below 16,244, we can see levels on the downside. If we do not open low, at least we will trade in this range. But certainly, there is only a 5% chance that the market will hit 16,600 levels. I'm not saying that it won't. There can always be a possibility for any kind of move in the market. We should be ready for that. We should not be married to our views. That means if I think that the market will go down today, that buyers should not kill my opportunities in the market. That also increases the risk. If you are married to a bias, your risk in trading amplifies. That's why today my first hypothesis is it will trade below the yesterday's range. That means it will trade somewhere in this range. We'll get to the levels where it will go. My second hypothesis is that it will trade in a range bound manner in this level. I will explain in market profile graphic how we can identify this kind of range. If there is an outside chance, that 5% chance of market going up, we have to break 16,530 levels and go breaking above 16,600 levels. We'll also look at that. Similarly, in Bank Nifty, I expect it to open gap down below around 800 levels and then go down towards levels that we will devise. Otherwise, it can trade in a range bound manner in this particular range, or it can go breaking above 35,311 and 35,366 levels. These are the levels on the upside it should break if at all it has to go up today. Let's see what are daily charts saying and what are the levels we should look for in Nifty to identify levels on the downside. So in hypothesis 1, I expect the market, if the market opens and or breaks 16,244, the first point of contact will be 16,155. Below that, we can go all the way to 15,960. Or if the situation gets more negative, we can go even until 15,770. These are the levels which we should be worried about on the downside. Now, what are the levels if we trade within the range or if we go up? Let's go to the market profile graphic and identify what are the levels that if we trade within the range, what are the levels that we should look for. So if the market opens above 16,329, remember the level? If we open above 16,329 levels, we are going to trade within this range. Basically, within this large range, I will look for a range bound move in this particular part. So basically, if we have to go and trade on the in the range within yesterday's range, we should trade between 16,390 and 16,490 levels. That means the 400 put writers should stamp their view today right at the open. So we have to wait for the pre-open to see where exactly we are closing. If we close in pre-open above 400 and if we do not break down 379, 16,379, we can trade within this range and do not expect a trend move again. We have two trend days back to back. If you see, we have two trend days back to back. So do not expect another kind of trend day unless there is some kind of external news that is driving the market. The market will not have that much energy. It will always pause before taking the next move. So we will be trading broadly in this particular range. We will be trading broadly in this particular range. Just a minute. So probably we will trade if we are in a rangey, if we trade in a rangey manner, this is the range I will look for. If we go down, we have discussed the hypothesis 1 and we have discussed hypothesis 2, which is a range bound thing. And in hypothesis 3, if we break above 530, only if we break above 16,530, we may look at levels of 16,645. Even then, we have to be ready for a fall. As expected, there is 95% chance that we can break down today. That means we are going to end lower only. That means we should end below 16,485 today. That is my hypothesis. This is how it is for Nifty. Let's look at Bank Nifty. In Bank Nifty, again, if we have to be range bound, we should trade within this particular range. We will trade only in this particular range. It is between 34,960 to 35,195. If at all we look at upside, we should break 35,311. Then only there will be upside. So my first hypothesis is a range bound trade today. If we open within this range and stay within this range, if we have to break on the higher side for higher targets, I will be looking for a move above 35,311 levels. If that level is broken, the first level we will look for is 35,680 or 35,600 levels. If we break down, if we follow Nifty and if we break the day low of 34,720, what are the levels that we should look for? Let's go to Bank Nifty daily chart and see what is happening there. On the downside, I will look for levels of 34,428 and 33,981. So either we may stay within this range around the 20-day or 8-day moving averages, or I can go up about 35,311 towards 35,631 levels. Or the third hypothesis is, which is most likely today, is going towards 34,428 and 33,981. So these are the hypotheses for Nifty and Bank Nifty futures. Let's check what is happening in Reliance. Yesterday, surprisingly, Reliance had a good up move, and I did not expect this. So I did not trade this. I did not have a view on Reliance because I still think in Reliance, retailers are getting trapped. Basically, if you ask anyone, everyone will be bullish on Reliance. But I will be bullish on Reliance only if we close about 28.56. Until then, I'll be careful. Either I should buy in this zone or I should buy on a breakout. I should not trade in between. What happens for retailers is, because they have small capital bases, they end up giving up to stop losses. For example, if you enter here, let's say you enter at 2727 or 2750, what happens? Your stop loss will be somewhere 100 points down, which is like 25,000 rupees loss in one futures contract. If you enter in cash segment, that is fine. If you can wait and do not put a stop loss, that is fine. But in futures, the leverage is very high and we have to be extra careful in trading futures in wrong locations. So when you are trading, the trade location is very important. It's not your knowledge or it's not what you think about the market that are important. What is important is, where are you trading? What is the lowest risk zone that you are trading? If you do not get such lowest risk zone, do not put your money in the market. It is the worst thing to do. You will end up losing all your capital and broke. Now, what are the situations in Reliance? How should we trade this? So here you see that the kind of cup is forming. So technically, a kind of cup and handle may also form. So for a handle to form, the market has to come down like this and then go up. Or if it is a breakout, if no cup and handle forms, and if Reliance breaks out, I want a close at least about 2856, where I can go with a stop loss of as low as 50 points. That's it. Even 50 points is huge for a retail trader, because that amounts to around 12,000 rupees loss. So we should be very careful regarding that. So only on a breakout of 2856, I should enter, or I should wait for it to come back to lower levels and take support. You see that this is a confluence zone of 8-day moving average, 20-day moving average, 50-day moving average, and 200-day moving average. On a structural basis, on a daily basis, Reliance is positive because it is trading about 200-day moving average. But we have to be very careful about the trade location. You should not trade anywhere and everywhere. On an intraday basis also, you have to be very careful when you are trading Reliance. Hope you liked this edition of State of the Market, guys. If there is any feedback, please put in your comments and ask your friends to subscribe to this channel. That's it for today, and trade safely. Have a great day. Bye bye.